Welcome to The Winning Trade. Each episode in this series will demonstrate how to make money in the stock market, whether the prices are going up, down, or sideways, using high probability, profitable strategies that were designed to take advantage of the volatility of the Russell 2000 and the S&P 500 indexes. Many of these strategies were designed to work together to maximize profits by flowing with the ever-changing market conditions. Follow along as we uncover the secrets of this episode's winning trade. Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade. But first, the required disclaimer material. This presentation is given for educational purposes only. We are not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and make sure you are aware of all your risk prior to placing any trade. Also note that we are using hypothetical computer-simulated results and/or performance. And although they are believed to be as accurately represented as possible, be aware that live results can vary for many, many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance coach and success coach with Locke in Your Success LLC. And myself and my team help traders win in the markets and in life as well. And I'm here today to guide you into the realm of high probability income trading. Now in a moment, not now, but in a moment, we're going to go over the winning trade. But before we do, let me quickly explain to you what we mean by an income or high probability trading strategy. An income strategy is where we put ourselves in a position to generate profits through the passage of time rather than depending solely on price movement to go in the right direction, meaning that we can often make money whether the price goes up, down, or sideways. Now, this doesn't mean we're going to win all the time, but it does mean that the probabilities of us winning are much higher than they would be otherwise. Now, when you find you want more information as you're following along, contact us at lockeinyoursuccess.com or ask a question in the comments on this video, and we can direct you to where you can find more information. All right, so let's move on. The winning trade we're looking at today is called an X4 version 22, or V22 for short. The version 22 is one of three primary trading structures within the X4 training system, and it's designed to maximize results in neutral to bearish conditions. The version 22 is a bit more active and a bit more complex than the other X4 strategies. However, it's also the highest returning rule-based strategy of the series. So the X4 version 22 is a market neutral income strategy for the SPX. It requires a minimum of $3,500 per trade. The recommended trade size for this position and the example size is going to be a $35,000 planned capital trade. The trading strategy does not have a profit target, but in general I expect a good month to return well over 10% planned capital, and it has an exit loss trigger of 7.1%, which for our example size is going to be $2,500. All right, so let's look at the situation. It is July 5th, 2019. Our September expiration trade is 77 days to expiration, and that's what we do with this trade. We enter at 77 days to expiration. We will exit this position when our November options are 77 days to expiration. This position is entered as a butterfly, and generally butterflies are going to be negative delta if you enter them near the center. And to correct for that negative delta, or to flatten out our line here, which is called the T plus 0 line, to flatten that out, we're going to add a call. Now, our wing widths on this strategy, they vary, and they vary depending on the market conditions and the volatility skew. In this particular case, we're using 80-point wings. And with that 80-point wings, we are using 64 delta call. That's going to bring us down to a neutral delta position. With a strategy here, what we're going to do, if the market comes down under our short strikes, we're essentially exiting the butterfly here and we're going to reposition it. If we have a problem to the upside where we become positive vega and we can't correct it, then we're going to be rolling this to the upside. So it's a position that rolls both up and down, and when the market is like it has been and it's been moving a lot, we do get a lot of activity in the position of moving it back and forth, but as you'll see, that it usually turns out quite well. So Here is July 5th. If we move forward to the first adjustment, what happens is the market backs down, or the SPX in this case backs down to underneath the short strikes. We're not watching this intraday, we're just kind of checking it at the end of the day, and by the end of the day we're well below our short strikes here. So we're going to take the position off and we're going to move it back to starting position essentially. So in this case here, starting position, we generally have our shorts about 17 to 27 points under the money. So I would pull this position off here. And you can see I brought the short strikes back to 29.40, which is actually exactly 20 points under the market at this point. And our delta is generally going to stay neutral here. It'll be somewhere between plus and minus 10. So this gives us a delta of minus 2, which is perfectly acceptable. If we go into our next adjustment period here, it happens to be the very next day, we get another 20-point drop in the market. If we look at our price charts, this is what's been happening, right? We entered back here on, let's see, July 5th, which was back here. The market ran relatively sideways for a while, and now it's really starting to fall apart. So that being the case, we're below our short strikes. The market's at 29.31. Our adjustment brings us back to, or our rollback brings us back to 29.10. We have a delta of 3.82, which is fine. Our wings, 1, 2, 3, 4, are still 80 points wide. During this position, during this trade, the wings will vary a little bit. If the volatility gets extremely high, we might widen these out or narrow these out a little bit. And if it gets very low, we will definitely narrow them out a little bit. So if we go to the following day, I'm going to take off the adjustment for now. If we go to the following day, we get a big one. We get 90 points down in the SPX. That is a monster move for the SPX. But one of the things I really, really love about this strategy is it generally takes a down move very, very nicely, even with this type of down move and a very large implied volatility increase. Despite that, we've actually gained money with that move down. And that has a lot to do with the dynamics of volatility within a butterfly, with a butterfly call structure. And like I said, I love it. It makes it very resilient to the downside. So anyway, you can see our price charts here. We just kind of fell off the wagon here as far as price move. We had a really hard down move. So the market's at 28.41. We're just going to roll this back again to about 28.20. So let's take a look at that. And here's our new position. We rolled this back to 28.20. We still have 80-point wings. Our delta is minus 1/2, which is perfectly fine, a position this size. If we go to the following day, we get a relief, which is not too uncommon. We're still drawn down slightly, about $88, which is no big deal for the position size. We move to Wednesday. We run into a position where we have trouble keeping our Vega positive. So I'm looking at my Vega number. So what I'm going to do here is, if this gets positive, I'm going to try and make it negative by rolling back these upper longs here. So I'm going to take, say, 10 of these and bring these back and see what happens. It puts me to positive 22 delta, and it doesn't change my Vega. If I roll it back 20 points, it brings my Vega down a little bit, but it's still not within parameters. It's still not negative, right? I want my Vega negative. So it's pretty obvious here that this rolling back isn't helping a whole lot with this specific implied volatility structure of the asset right now. So what's happening is I'm rolling back this upper long. I'm not really making a big impact in my Vega numbers, and my delta's gone to 44 positive. Right, so I may actually be able to roll this back enough to get this negative Vega, but I'm not going to allow my delta to get too positive. I'll allow it to get to about positive 40, but I'm at positive 44 already, and I still haven't gone negative Vega. So that's basically telling me that, hey, I have to roll it back up again. So I'm going to come in here and I'm basically going back to starting position again. We're rolling it right back up to, we're at almost 28.90. So we're going to roll it up to have short strikes of 28.70. And you can see that if I put the trades on here, we just come back to starting position once again. Notice here, I did end up moving the call. So we will move this call occasionally, depending on what's going on within the dynamics of the position. In this case, we brought it a little bit deeper in the money. We brought it from a delta number in the 40s down to 55. And again, we'll do that to make, a lot of times to make minor corrections when we start playing with our wing widths. And right now, by the way, our wing widths are still maintaining our 80-point wing width here. So let's move it forward. August 8th, we get a 40-point up move, but there's no triggers. We're still nice and negative vega here. Our delta's fine. There's no issues there. Scoot ahead to the 12th. The market starts to back off again. Take a look at this price chart, guys. We're getting some serious movement in the SPX here. Like I said, we went through this crash. We went through a very large bounce, and now we're pulling back down again. If we go all the way to the next adjustment day, which is going to be August 14th, we ended up having another really large down day in the SPX, an 80-point down move. We ended up getting below our short strikes once again, so we ended up rolling this back. So I take this position here, which was at 28.70. We roll it back, in this case to 28.20. So let's take a look at that. Here is our new position. So now we're at 28.20 shorts. We've actually widened the butterfly out a bit because the volatility is picking up. It's not really backing off. So we're up to 90-point wings at this point, and we're still running about a 54 delta call at this point as well. But you can see, even with the crazy price movement here, we are doing quite well, or we're at least holding our own here on the position, which is quite nice. We move forward a couple days. We're having the same old thing here. We're having a nice, really hard bounce. We're getting up towards the edge of the butterfly here, but really nothing to do. We move to the 19th. We end up in that same situation. We get well outside the butterfly here. We end up positive vega. If we do our test here and we start rolling back some of the upper longs, we find that we cannot correct that volatility without going to positive delta. So that's going to require a roll up. We're at 29.27. That's going to make our short 17 points under that, which is going to be 29.10. So let's see that move here. There we go. So we shoot up to 29.10. Generally, when we get an up move, we usually get a volatility drop. We usually tend to narrow our wings a little bit, and we narrowed from 90 to 70 here, and we put in a call of about 74 delta, which is a pretty standard move. And this is our position as of the 19th. The very next day, we get a down move of 14 points. That puts us under our short strikes. So we're going to go ahead and roll this back to this. At this time, it's going back to, let's see, 29.90. So you'll see that happen here. Our new shorts are at 29.90. And this is our new position. The money's finally starting to come into the position. We're up about almost $1,300. So things are going quite well, considering the market movement that we've had, of course. So from here, we get a couple of days to chop back and forth in the market, and everything's going well. We're up to about 13.72 here. And the following day, on Friday, we get another one of these huge down moves. 72 points, obviously had a really nice volatility increase. We're getting closer to expiration. We're getting a little bit more sensitive to price movement here, but you can see we did draw down, but it was nothing catastrophic. So with this down move, we're obviously back under the shorts again. So what we're going to do here is we're going to take this and we're going to roll this back to 28.30, and you'll see that move here. The new position is at 28.30 shorts. And again, we're back to starting position. In this case, we're slightly positive delta, but again, that's within the guidelines, so not really an issue there. If we go to the 24th, the 26th, the next Monday, we get a fairly large up move, but we had a nice volatility shift. And that volatility shift ended up putting us up about $2,852. We go to Tuesday, we stagnated a little bit. Wednesday, we got another up move, but our vega is good, our delta is good. We're up about 3,100. And then here on Thursday, we got a fairly large up move, 35 points in the SPX. We are above the tent once again, and our vega is positive. Now, in this case, we're getting close to the exit of the trade. Remember, I told you that we're going to be exiting the trade when November is 77 days to expiration. Right now, it's 78 days to expiration. So one of the rules within the strategy is if we're within 3 days of exiting the trade by time, which would be 80 days to expiration, and we have to make a major adjustment, which would be considered a roll. So if we're within that 80-day period on our November expiration here, and it would require a roll, then we are going to exit the position. So that's what we do here, and we take this position and we exit it out with a profit of about a little over $3,500, or a little over 10% of our planned capital. That was the X4 version 22 strategy, this episode's winning trade. If you like what you see, I encourage you to join us and discover how you too can follow along with this and other fantastic income strategies as they unfold during our weekly options trading income webinars. And perhaps best of all, you can discover how to skyrocket your trading results through mastering the mental game of trading with our free Trading Performance podcast episodes, where you can learn to become a much more effective trader regardless of the type of trading you do. If you have any questions or comments or anything you'd like to see on the next winning trade, we'd love to hear from you. Simply comment on this video below so we can get those answered for you. And we would also like to encourage you to come on over to thewinningtrade.com, where you can find past episodes of The Winning Trade, as well as a lot of other fantastic information on how to profit through income trading. Thank you, and we'll see you on the next winning trade.